Recently, REITs rallied after the Fed announced that the October Consumer Price Index had come down to 0%. The market took this as proof that the Fed's aggressive interest rate hiking campaign had finally killed inflation and that further interest rate hikes wouldn't be needed. On the contrary, many investors are now quickly changing their tunes and expecting significant rate cuts over the coming years. To give you an example, Morgan Stanley just released their outlook for next year and they expect the first rate cut to take place in June. Similarly, UBS recently went on CNBC and they said that they expect significant rate cuts over the coming years. They believe that the Fed is likely to cut interest rates by 275 basis points as the economy dips into a recession. And it's not just Morgan Stanley and UBS, in fact this is slowly becoming the consensus expectation among investors. This is obviously very bullish for REITs because the only reason why they are so heavily discounted today is the recent surge in interest rates. If you now remove this reason as interest rates return to lower levels, we should see REITs rally to much higher levels. And I think that we just saw a first glimpse of that in recent weeks. REIT sector averages rallied by about 10% and many individual REITs rose by as much as 20 to 30%. But interestingly, there are some individual REITs that missed out on this rally and remain very opportunistic today. Hey everyone, this is Yoshi. I run a small investment firm that specializes in REIT investing, and in today's video I want to talk to you about one particular REIT that I've been buying lately. This REIT is called BSR REIT and it's an apartment REIT that specializes in rapidly growing Texan markets. But before I get into it, could you please do me a huge favor and click the like button? That will really help me a lot to grow this channel. Thank you so much for your support. So in recent weeks we saw most apartment REITs surge in value. Most of them rose by about 10%, but some of them rose by as much as 20%. But BSR completely missed out on this rally and as a result it has now become even cheaper relative to its peers than what it used to be. I believe that this is a buying opportunity because I don't see any fundamental reason to explain this recent underperformance. I believe that the reason why BSR missed out on this recent rally is because despite owning properties in the US, it's officially structured in Canada and that's where its stock is traded. As a result, its stock is often uncorrelated from its American peers in the near term, and I took advantage of this delayed market response by buying more shares of the company. Today, shares are still priced at a roughly 7% implied cap rate, which is truly exceptional for garden-style Class B apartment communities in rapidly growing Texan markets. In the private market, if you try to buy similar assets, you will be happy to get a 5% cap rate. On a price per unit basis, we're also paying only about $160,000 per unit, but the replacement cost of these properties is far greater. I expect the net asset value per share of the company to stabilize at around $18 per share, and yet today it's still trading at $10, representing a 40% discount to its net asset value. Not long ago, BSR actually traded at a small premium to its net asset value. It was actually priced at a 10% premium prior to this recent surge in interest rates, as a lot of investors wanted to participate in the growth opportunity that's happening in Texas. Today, the management is taking advantage of this market dislocation by buying back shares of the company hand over fist. And as the market sentiment for REITs now start to improve, eventually I expect the gap between its net asset value and its share price to close back down, and this could unlock up to 50% upside for shareholders. And while you wait, you earn a roughly 5% dividend yield, even as the management retains about half of its cash flow to keep buying back shares, creating significant value for patient, long-term oriented shareholders. For this reason, I continue to believe that the risk-reward of BSR is very compelling, and this is especially true following its recent underperformance. I bought some more shares and I expect to keep accumulating more of it over the coming month. Now, if you want to access my entire real money REIT portfolio, feel free to join High Yield Landlord, which is my REIT newsletter for a 2-week free trial. I'll put a link to it in the description of this video. And then finally, once more, if you could please click the like button, that will really help me a lot to grow this channel. Thank you so much for your support and see you at my next one. Bye bye.